Welcome to the DebtCircle podcast. Today I'm Vijendra.
And I'm Leela. Today we're covering Gift City's social infrastructure push, how fund managers are building dedicated REIT and InvIT portfolios, and the RBI's push for deeper bond markets to meet its 2047 goals. Stay tuned right here on the DebtCircle podcast.
Gift City is enhancing social infrastructure with a multi-sport arena, 8 pickleball courts and more, ready by September 2026, and a technology-enabled golf facility of 84,744 square feet by January 2027. A destination mall of about 750,000 square feet is also underway, reinforcing Gift City as a complete work and leisure hub.
This mirrors global financial hubs pairing lifestyle with business, boosting Gift City's appeal to international professionals and firms, and strengthening its long-term competitiveness.
Next up, India's REITs and InvITs now manage assets worth Rs 10 trillion across 32 listed trusts. The market's maturing fast, with launches like Edelweiss's Nifty REITs and Realty Index Fund, and Neo Wealth's Rs 1,000 crore Alternative Investment Fund, marking a shift toward pooled products.
Domestic investors still underutilize their exposure limits, but the sector is projected to double to over 20 trillion rupees by 2030. Liquidity is capped around 800 to 1,000 crore rupees per portfolio, but the growth pipeline stays strong.
On bonds, the RBI's deputy governor wants better bond market quality, not just size, to cut reliance on bank financing and help firms access long-term capital, key for India's 2047 goals. The focus is sharper credit risk pricing and stronger recovery mechanisms.
A stronger bond market means less pressure on banks, more diverse funding, and better risk pricing, all supporting infrastructure investment and India's push to become a developed economy by 2047.
India Gold Metaverse raised Rs 300 crores from private equity and secondary placements, facilitated by Pantomath Group, to build India's first integrated digital gold platform, combining Elanzia for aggregation, Ramudra blockchain, GoldSense AI for purity checks, and BullionX for institutional trading.
Strong backing from family offices signals real confidence in digitizing India's gold sector, boosting liquidity and formalizing the industry.
The rupee strengthened to 95.64 against the dollar, up 35 paise after a 54 paise jump the day before. Falling crude down to $87.10 a barrel and a weaker dollar index at 100.31 plus easing US-Iran tensions drove the move.
The Sensex closed up 14.66 points at 76,850.44 and the Nifty at 24,023.45, even as FII sold 1,688 crores worth of equities.
Small ticket consumer loans now make up 58.4% of household debt. Consumer durable loan portfolios grew 20.8% to Rs 1 lakh crore in fiscal 26, with nearly 40% of purchases now EMI funded.
NBFCs like Bajaj Finance are expanding fast using these loans as entry points. Loans above Rs 50,000 now make up 29% of new consumer durable loans, up 5 points, driven by Tier 2 and 3 cities, though lenders stay cautious on inflation risks into fiscal 27.
Government bonds rallied Monday. The benchmark 6.94% 2036 bond yield fell from 6.8253% to 6.7739%. The biggest single-day drop in 2 months, after crude fell from over $102 to near $89 a barrel post-US-Iran ceasefire.
Cheaper oil eases India's inflation and import costs, and the RBI is expected to hold rates at 5.25% next week. Fed futures show a 66% chance of a pause this week, but weak monsoon rains could still push inflation risks back up.
Policy Bazaar launched dollar-denominated term insurance for NRIs via Gift City's IFSC, premiums and payouts both in dollars, hedging against rupee depreciation.
It strengthens Gift City as a global financial hub and could boost demand among the diaspora for stable currency insurance options.
Kotak Mahindra Bank is raising $600 million via a 35-month overseas syndicated loan, rare for an Indian private bank, to boost foreign currency liquidity and support FCNR deposits under the RBI swap window.
It's part of a wider trend of Indian banks tapping overseas funding, strengthening balance sheets and cross-border trade finance.
Tamil Nadu Mercantile Bank's profit jumped 35% to Rs 412 crores, with net interest income up 32% to Rs 765 crores and margins improving to 4.3%. Advances rose 27% to Rs 57,306 crores, with retail lending up 36%.
Asset quality improved too. Gross NPAs down to 0.73%, net NPAs at 0.17%. They're investing 280 crores in tech and expanding to 628 branches.
Tata Power's board approved raising up to rupees 4,500 crores via non-convertible debentures, mainly to refinance existing loans and cut borrowing costs. Shareholder approved back in July 2025.
That should strengthen Tata Power's balance sheet and financial stability in a competitive energy market.
HUDCO's net profit rose 35% to rupees 851 crores, driven by interest income of rupees 3,710 crores. They raised rupees 2,140 crores via NCDs and cut credit loss provisions to rupees 621 crores.
A strong quarter for urban infrastructure lending. The interim dividend of 1.25 rupees per share reflects healthy cash flows, though future growth depends on policy and credit rating trends.
Finally, Velora Impact posted a net profit of rupees 7.90 crores in Q1 FY27, reversing last year's loss of rupees 2.11 crores, with revenue surging to rupees 141.92 crores from just rupees 1.17 crores,